All right, so my next guest, also bullish on AI. I want to bring on UBS Global Wealth Management Head of Global Equity Strategy, Nadia Lovell, and let's pick up on that conversation. So he's thrown in the towel on software because AI is just that powerful, and maybe future iterations become even more powerful. But bullish on AI, you like the platforms, you like the apps, and you like the pricing power.
Yes, and what that really means, it's not that dissimilar from what he's saying. I mean, we have been bullish on AI, as you know, but even us have been really surprised by the earnings momentum, what you're seeing. And while that is happening, you're finally seeing some monetization happening, particularly on the cloud revenue standpoint. So when I talk about platform, those are the things that I'm talking about. I'm talking about those that also have exposure to cloud revenues. In the first quarter alone, you've seen like a re-acceleration in cloud. You know, cloud was up 40% across those four major cloud providers. And that's an acceleration from 35% in the last quarter, in the fourth quarter. And we think that it could get to 50% in the next quarter. So those are some of the areas that we are really focused on right now.
It was interesting that after ChatGPT, Wall Street felt like, you know, these hyperscalers couldn't put in enough money. Then last year they were putting in too much. Where's our return on investment? And we're starting to see that. No one was upset last week because the market did pretty well after they hiked these numbers again. Now, you like the infrastructure spot of this, really. That's the sweet spot.
It is a sweet spot because when you talk about who's benefited from this increase in CapEx, I mean, as you said, you saw numbers move up last week. We think the numbers are going to continue to go up. I mean, when you look at global CapEx for AI for this year, it could be over $800 billion. By next year, it could be over $1 trillion. And what really benefits from that is those picks and shovel companies. You're seeing the bottlenecks, as you talked about earlier. It is now beyond GPUs. It's, you know, you're now seeing it in CPUs as you get more advanced agent workload that's happening, that's increasing that demand. You're seeing it in memory. You're also seeing it within packaging. And so those are the areas that we're really focused on in AI.
And testing, and the list goes on and on and on. And who thought CPUs would become a bottleneck?
I mean, look at Intel, right?
Exactly.
They sold things that they normally would have scrapped.
It's amazing.
The market is so tight, and that means that these companies also have pricing power.
So let's talk about one concern that you do have, though, at least near term. That's what's happening in Iran, the Strait of Hormuz. It's still, you know, the headlines still aren't hitting the markets the way it might have done a couple of years ago, maybe even at the onset of all of this. Mm-hmm. Are you in the camp that thinks Wall Street's ignoring this to their own detriment, or that Wall Street's properly looking through it, although just not necessarily whistling past the graveyard, but it shouldn't be holding the markets back right now?
And it shouldn't, because, again, the earnings season is coming in strong. I mean, you look at the first quarter earnings season, you know, coming in higher than our 17% expectation. And we think that that will continue for the rest of the year. And a lot of this has to do with the AI. And so while it's a risk that you have to continue to be mindful of and cannot completely ignore, we know that it is the earnings that eventually drives this market, and the economy is still on very strong footing. It does have implication for Fed pricing, though, if energy prices remains elevated.
Right, that will handcuff Warsh's. Any anticipation that he can hit the ground and start cutting rates right away. You just talked about these earnings coming in even better. You've been at 7,500 for a while. Is it a chance maybe you go back and sharpen a pencil here?
You know, when you think about it, like, you know, we do expect the S&P to reach 7,500 later this year, and that might prove to be conservative just given the earnings momentum that's happening. And if these risks around these terrorists that we do think is slightly underpriced in the market around the energy and the Strait of Hormuz sort of fade even more, and the flow of oil returns and opens the strait, then you think that could push this market particularly high, particularly the cyclical areas of the market. But our core message is to stay invested, stay diversified, focus on those structural growth trends like AI, as well as power and resources, and even in the longevity space.
The longevity space? Is that the niche? I mean, how do you play the longevity space?
How do you play it right now is really through healthcare, right? You also want to think about what does it mean when people are living longer, right? It probably means that we're getting better healthcare treatment, better cures for diseases. And so healthcare right now is the way you capitalize on our opportunity. But over time, that will shift to what does it mean for financial services as well, or real estate, you know, and housing and all of these things. So we think over time that this is probably the largest opportunity, even larger than AI.
Wow, good stuff. Thanks a lot, Nadia. Appreciate it. All right, folks.